Good morning, everybody. This is Clint Langford, co-president of the San Antonio chapter of CFMA. If you don't mind, if y'all do a sound check for me real quick and just in the chat session, let me know you can hear me.
Or if everybody can raise their hand on there that you can hear us. Yep, okay, we're getting that. Okay, great.
Okay. If y'all will, we'll give everybody just a couple more minutes to try to get logged in here, and then we'll do some formal introductions of our speakers today. James, I didn't know if you had anything you wanted to share with the group this morning, but might have a few minutes to do that here.
No, just the upcoming events for the chapter. That if anybody, the Construct a Kids Christmas is going to be virtual this year, so you can go to the Construct a Kids website and register if you want to attend the virtual event that's doing a little bit differently. So if you want to visit their website for all the changes that will be going on, I think they're still having some good fundraising events for the kids and drop-off toy locations. And we're trying to schedule an event in November where you can, if you want to drop off your toys, and we'll have a place to meet and drop off your toys at that time, and we'll get that notification out. And then the golf tournament was rescheduled to the spring, and we'll be sending out more information on that as well.
Thank you, James. Let's just give everybody just a minute or two longer here, and then then we'll get the presentation started.
Okay. Let's see what we got. Probably just some housekeeping things. What we'll do is take questions through the system as the presentation is going on, and then we'll have some time at the end to answer those questions. If you have any technical difficulties or whatever, we'll be monitoring the chat as well. And we should be getting started here in just a second. I guess everyone is just, let's see.
You'll bear with us for just a moment. We're having issues with our panelists or having issues getting online here. So give us just a minute or two and we'll get them on and introduce and start to the presentation.
Okay, we appreciate it. We've got 48 people in attendance so far, and I think we're hopefully pretty close to going on. Yes, if there's anything, Clint, that you want to share with our audience?
I know the topic of today's discussion has been something that most all of us have been dealing with or heard about over the last several months, and that's just talking through the PPP program. As most of you are aware, several of the banks have started accepting applications for the forgiveness of those funds that were provided. And I don't want to steal too much of Tim and Leticia's thunder today, but they're going to go through some of the specifics, some things to think through and work through as you're working on those forgiveness applications. There's several resources out there that you can refer to. Obviously, Tim and Leticia have spent quite a bit of time putting together the presentation for us today, and we'll share some details with us. But if you're having struggles with this, I know the AICPA has issued several different FAQs and resources and tools out there. I'm sure most of the CPA firms, I know BKD where I work has put out several resources for our clients and prospects as well. So make sure you're reaching out and getting assistance with this. We all know this is important funding for many companies that came through, and so wanting to make sure that the application for forgiveness goes smoothly, and that you're able to get as much of the funds forgiven as you possibly can. So with that, I'll quickly introduce our speakers for today. And Tim, if you can you let me know if you can hear us and are able to speak at this point?
Well, I guess one thing I did want to mention about CFMA nationally, we will be getting a new website for that. They're doing training now, and hopefully before the end of the year, we'll have a brand new website, new look, better functionality. So we're pretty excited about that. It's been long overdue on the chapter website and the national website. And there are some chapters that are starting to do hold in-person meetings or hybrid type meetings. I think our plan is not to till after the beginning of the year to try to hold an in-person meeting. We'll still start providing more information on that later this year. But that is currently the plan, is not to have an in-person meeting till then.
James cannot hear you. Well, we can hear James talking. Can you hear us on the phone?
I can on the phone. Mute your phone.
Okay, can you hear me now on the phone?
We can hear you, Tim.
Okay, perfect. Then you guys, okay, we can see you, so you can share the slides. I'm gonna hang my phone up, Melissa. Okay, so I guess we're ready. Is that right?
Let me get the correct screen pulled here. And James, can you see the PPP presentation now?
Right. Right.
Yes, I can see it.
And you can hear us okay?
We can hear you.
So just hit the enable editing button in the center. And
Yeah, let's see here.
okay.
So I think we're ready to go.
Okay.
So we'll just tell you when to advance the slide when we need to advance the slide, okay?
Okay. James, is that showing through okay?
No, we're getting the wrong screen. We need the other. We're getting the other screen. If you go to slideshow and take off the use presentation view over to the right, take that off, and then now go ahead.
Well, and it's throwing it on my other screen. You'll give me just a
Yeah,
second.
we need your other screen. Yeah.
I think it works. So we'll just go to plan C.
There we go.
All right, James, how's that?
Perfect.
All right, well, let me introduce our speakers real quick this morning. Tim Geppert, CPA and CFO advisor with VACO, is joining us this morning. Since joining VACO in 2012, Tim has focused his practice on small to mid-sized construction companies. This includes general contractors, concrete, masonry, interior, electrical, mechanical, telecom, utility, and others. His services included serving as a fractional CFO or controller, family mediation, buy-sell transactions, exit planning, CPA year-end preparation, special projects, financial analysis, productivity and profitability improvement, and quarterly financial statement review. In over 30 years as a CFO and Chief Administrative Officer, Tim managed the IT, HR, legal, insurance, and project controls, the field offices, travel, state licensing, tax, and administrative departments for a large construction company. Also this morning, Leticia Amon will be presenting for us as well. Leticia worked at Zachary Corporation for over 20 years, most recently as the Vice President and Treasurer. Her experience includes cash management, cash projections, led the investment committee, managed investments for all operations. Leticia is also familiar with the preparation of federal tax returns, state tax returns, pre-qualification, property sales tax returns, and processes. With that, I'll hand the presentation over to Tim and Leticia.
Okay, we're ready to roll. So, Clint, can you hear me okay?
Yes, sir, I can hear you, Tim.
Okay, good. All right, so we'll get started. You can advance to the next slide, please.
Okay.
Okay, so first we apologize for the technical issues. Seems like everybody's facing some of those these days. But anyway, this one was longer than I expected. It was quite stressful, but we're online now. So this is the outline. We're going to talk to you about the forms, their various forms at a high level, the timeline, the documentation requirements, the portals that the banks use, and then we'll throw in some tips on forgiveness topics, talk about the tax effect, the PPP, the gap effect, claims and change orders, what you have to do if you're doing any kind of sale of a business or reorganization, and then we'll go to chat and see what James and Clint have for us as far as questions. So we're going to get started with Letitia. She's going to be the one that's going to go through all the various forms. Next slide.
So before I get into the details, I just wanted to give a little bit of perspective because Tim and I, we've been looking at PPP for a while, but we've been looking at it from a different perspective or a different lens. So I know in the introduction it mentioned my background in accounting and finance and mentioned some tax. I also serve on the board of Texas Heritage Bank. In that capacity, I serve. The board members serve on their loan review committee and then also on their cybersecurity. And, obviously when COVID happened, there was a lot of activity, although many of us were at home. A lot of the banks were very, very busy with these loans in April. And so I shifted gears, and in addition to the board work that I was doing, I began to audit some of the application files for the bank. And some of that included obviously looking at the SBA application and approvals, but we also had to have documentation in regards to the Bank Secrecy Act and their compliance. We wanted to make sure that we had information in regards to the loan or grant calculation and the appropriate support, making sure that the loan documents were complete, and then also making sure that we had corporate documents. It obviously was a very busy time because, in a typical bank, when you're closing one loan, all of a sudden when you're closing 20 loans, it was really busy, and there was just a lot of paperwork going back and forth, and we wanted to make sure that the bank had all of the information that they needed. In addition to the audit, I also assisted with the forgiveness applications. So there were many questions from borrowers, when do we apply for forgiveness? How do we apply for forgiveness? I also assisted in the development of the processes and portals for accepting the applications. And then, of course, developing a review process, obviously as the banks are getting this information, what is it that needs to be reviewed? What is it that needs to be documented? And just making sure that there was sufficient training for the team and the lenders. So again, it's a little bit of a different perspective since it's not necessarily from the borrower perspective, but it's more on the lender side. So I'll be going through some of the forms and some of the documentation as well, but it is going to be from that perspective. So with that, the first slide is which form should you use? There's been obviously a lot of changes since the start of this. We started with the basic form, and then we went in June to where we had an easy form and the main 3508 form, and then most recently at the beginning of the month where they released the 3508S form. So as you look at the different forms and what should you use, I think about it in a couple of different ways. First of all, what is the main criteria, but then also how are you calculating forgiveness? Is there an adjustment for the FTEs and salary adjustments? And then also we're all familiar with Schedule A, so is there a Schedule A requirement? So the easiest form, of course, is going to be the 3508, and that is going to be for borrowers with $50,000 or less in their loan amount. In regards to forgiveness, and we'll look at the form in just a moment, but there really isn't a calculation itself on the form, so the borrower will be calculating it on their own, and there aren't any don't have to consider for any adjustments on the FTE salary adjustments, and there is no Schedule A required on the Form 3508S. The next is the 3508EZ, and from what I'm seeing from a lender perspective is that most borrowers seem to be falling within this area in the 3508EZ, and it is different from the 3508 in terms of your requirements, but there is still a calculation. So on here, what's listed is you could use this form 3508EZ if you can check at least one of the boxes. So the first three boxes. The first, of course, is the borrower is self-employed or sole proprietor. And again, this is an or, you don't have to have all three. So the second is if the borrower did not reduce any annual salary by the 25% and also did not reduce the number of employees. So if there weren't any changes either on the salary side or on the employee side, then you're able to use the EZ form. And then the third criteria is, if you didn't change the salary by more than 25%, but if you were not able to operate during the covered period due to compliance of the CDC or OSHA, then that's almost like the safe harbor in essence. So you would be able to use the EZ form in that case. In regards to, again, the calculation of forgiveness, that is going to be on the application, and we'll go through and I'll show you a snapshot of what that application looks like in the main points. And then finally, the Form 3508, anyone would be able to use this. There is a lot more detail on this form, in terms of the documentation that needs to be provided. It would essentially be the same, but the 3508 is going to be where you're really walking through in detail and presenting all of that detailed information to the lender. There is a calculation, and yes, you are showing the adjustment for the FTE and the Schedule A. It would be required for the 3508. So if we could go to the next slide, this is going to be page 1 of the 3508S form. And you'll note that there's a lot of basic information up at the top of the form. There is, you'll note quite in the middle where it shows the employees at the time of the loan application and employees at the time of the forgiveness application. And there really hasn't been much discussion about this because obviously, even if your employee count did go down, you're still able to use this form. What we're thinking that is that they're really just trying to track the information. So it really isn't going to be used for another purpose. And then I highlight the forgiveness amount, which is the amount that you're going to be plugging in, which you notice on here again, this is really the basis of the form. So there isn't much information. So you are having to put the forgiveness amount. So it makes, you get the impression that there really isn't going to be that much work, that it's almost an automatic forgiveness, but you actually still do have to go through the calculation. So moving on to the next page, which is the 3508S instructions, you'll note on here, and I've highlighted the section in between, which basically shows that yes, for the 3508S, there are fewer calculations. Now for the 3508S also, you are exempt from reductions in forgiveness based on reductions of FTEs or in salary. So that is the big deal here. So $50,000 or less, and even if you did have the reductions in the forgiveness or the FTE, for FTE or in salary, you're basically, that is your out, or you're still able to get full forgiveness, assuming that the cost has been expended. And then also, it's indicated on there that you don't have to show the calculations, but just keep in mind that the lenders could possibly request it, and also the SBA could possibly request it in the time of an audit. So moving on to the next page, which is the 3508S certifications. And Tim is going to be talking about a couple of these items, but I just wanted to point out that as a borrower, you're still certifying to the lender that essentially the forgiveness amount does not exceed the principal amount of your loan, but you're also certifying that you are paying costs that are eligible for forgiveness. So this still has to be basically 60% of the cost should be payroll related. And there are limitations or caps as it relates to the 24-week and the 8-week covered period, which again, Tim is going to cover in another section, so I won't go through that in detail. The next item that's highlighted is just ensuring again that the borrower has accurately verified the payments for eligible and non-payroll costs. So making sure that you're providing the appropriate information to the lender and just making sure obviously that it's accurately calculated is going to be important as you're submitting this information. So that's it for what we have for the 3508S, but we'll move on to the 3508EZ, page 1. And on here, once again, you have the basic information up at the top, but I've highlighted the covered period. So this will be this form and the 3508, where you will have to indicate what your covered period is. And as you recall, we started off with an 8-week covered period, but then in June 5th, when the new ruling came out that you could extend this essentially to a 24-week period. Now, loans that were after June 5th, it is an automatic 24 weeks, and that's what should be indicated in the loan documents as well. And then also after June 5th is when you've gone from the 2-year to the 5-year. If you received your funds prior to then, you can talk to your lender about making that adjustment and having a loan modification, or if you just want the extra time for the 24 weeks, that would be great. And one thing that we've seen quite a bit is for borrowers that, were not able to use the funds within 8 weeks, once they extend it out to the 24 weeks, they really haven't had any issues in regards to spending those payroll costs. So as indicated on your covered period here, so you'll put, the beginning and end date of your 8-week or the 24 week. And even if you are spending the money, say for instance, over a 10-week period, you would still put the 24-week date on here. It is really just for information purposes. So you can cut it off sooner. On the next slide, which is the 3508EZ, so this is the bottom essentially of that first page of the 3508EZ. So what we've shown on here is we do know that the lender, there are certain items that they're going to be reviewing as they're going through your application. So I've marked those off. So essentially the top section, which is where you would include your payroll and non-payroll costs. So the lender is going through and verifying that the amount that is on here is consistent with the documentation that you have provided. So that would be for payroll costs and then the non-payroll items, the mortgage interest payments, rent or lease, utility payments. And then they're coming down and they're just making sure that the formula is correct in regards to the payroll cost and the 6% requirement, which is just line 1 divided by the 0.6. So those are the items that are critical on the EZ form. Or just know that the lenders they are required by the SBA to review those items. So the next slide is the 3508. So again, the 3508, and this is page 1, and it's really the most extensive of all of the applications. So I would anticipate that for loans that are, possibly those that are over $2 million or a number of the larger loans, if they're, if they didn't meet some of the requirements or fit through some of the safe harbors that they're going to be using the 3508 form. So there isn't anything in particular here. One thing to note is just at the bottom, and I didn't highlight it, but it does indicate where if you did use the alternative payroll covered period, that is where you would list those dates on here. Again, what we've seen so far is the use of the alternative payroll covered period has really only been if for a borrower that is going to stick to the 8 weeks and not necessarily going to be moving to the 24 weeks. That's really the only time that we've seen that the alternative payroll covered period would be used. So if we could move to the next page, which is the bottom of 3508. Again, some of this information is similar to EZ, but obviously there is more information in regards to including the FTE and the salary and hourly wage reductions on here. But there is going to be a following page. So I've indicated on here the items that the lender is going to be reviewing, which is the non-payroll amounts, being the mortgage interest, the rent, utilities, and then of course the calculation down at the bottom. And then again, the difference in the 3508 is that there are more requirements to including additional information as it relates to payroll costs. And you'll see that on the next sheet, which is the next slide, which is the 3508 Schedule A. So this is probably one of my least favorite forms. Well, maybe the worksheet. The table is probably the worst, right. But in regards to the schedule, because here you are having to bring information basically from your Schedule A worksheet that includes your cash compensation on your Table 1 and Table 2, which we're not showing the detailed tables within this form. But then you'll also see that the lender is required to review all of the non-cash computational payroll costs, which include the employee contributions for health insurance, for the retirement plans, and then the state and local taxes on lines 6, 7, and 8, and then the compensation to owners as well. So there really is a lot of information that is to be included on the 3508. But again, one great thing is if you've kept your great documentation, and then also, especially in regards to payroll, since a lot of the third-party payroll providers have been providing all of the detailed reports, and a lot of it should flow straight onto these forms. So that is a quick run through all of the forms. The next item that we want to talk about is just to give you an idea of what this timeline looks like, because I know that early on, as we were talking about the timeline, it seemed that everything was going to go fast, and everyone, whether it was borrowers or lenders, thought that everything would happen really fast, probably in the current year. But when you look at this timeline, you can see that it's very possible that you're going to be sitting on your information or waiting on information for quite a while. So this timeline shows basically an 8-week and at the top and a 24-week, just to give you a resemblance of what the timeline would look like, assuming that you did get your loan early April. So you would just adjust appropriately if you received your loan subsequent to. So you notice that, first of all, you have your covered period, which is your 8 weeks, and then the SBA has provided basically 10 months prep time, essentially, for the borrower to submit. Again, you don't have to wait that long, but that is the time that the SBA is providing for submission of the application. So assuming that you did take the full 10 months, then obviously you would be looking into April, essentially, your final day of submission of 2021. And then the lender has 60 days to review the information. Again, I haven't seen that it's taken, depending on the complexity of your loan, it seems like the lenders would be able to run through the information pretty quickly. Once that is submitted through E-Trans, and the SBA has 90 days essentially to go through and review and approve, and essentially, hopefully, they will provide the lender with notification that forgiveness has been approved, and they would essentially send the funds back to the bank at that point. If they didn't agree necessarily, then just make note that there is a 30-day borrower appeal process at the tail end of that. So again, this is a process that could go on for a while. That was assuming an 8-week covered period. A 24-week covered period obviously would extend I tried to squeeze everything onto one page so that you're able to view it. So actually, I think my timeline is off a little bit when I did that. So it's more of a 24-week mid-September, and then all the way to a borrower appeal date, which essentially could go into the following year. And I know that, Tim is going to be talking about GAAP and tax in a bit, and that's something that you definitely need to consider as well, because although the SBA has given sufficient time for submission, you would definitely want to think about your books and how everything is going to be closing up, how everything is going to be recorded at the end of the year. And if possible, unless there's a really good reason, I don't see that many borrowers would be waiting the full time, although sufficient time has been given to the borrowers. So moving on, I'm going to walk through a couple of pages of documentation requirements. So the documentation requirement is based on the Form 3508, but there really aren't many differences whether you are using the EZ form or the S form. In terms of documentation, there is a lot of documentation and support that needs to be provided to the lender. So what we've showed on here is basically, 3 different columns, basically showing all the information that would be required, but then also showing which documents would need to be provided by the borrower to the lender, which documents would the lender need to send to the SBA essentially at the time of submission for the application for forgiveness. And then also just to have in mind what documents need to be provided by the lender to the SBA in the case there is an audit. So all of those, the lenders are thinking about those early on just to make sure that they have everything in place in case there is an audit. So the first section really is the basic documentation. So the borrower is needing to provide the PPP loan forgiveness calculation form, the loan certification forms, and then in some cases, again, this is based on the 3508, so you would be providing the PPP Schedule A, and then you've all seen that the demographic information form is basically tucked at the end, and that is optional. But just note on there, obviously the certifications, that is something that is provided to the lender, but it isn't sent to the SBA, and it isn't. I would think that they would probably ask for something like that in terms of an audit as well, but it's not listed on there that it would be required. Moving on to the payroll information that needs to be provided. Again, the third-party providers are doing a great job of putting together the information that is just easily accessible once your quarter ends. So you're able to provide basically something that's similar to your 941, but you would need to provide the bank account statements or the third-party reports to the lender, and then also any of the quarterly payroll tax filings, any of the state quarterly, business individual, basically all the information that's related to payroll, you are having to provide the tax forms. And then also the lender may be requesting payment receipts, cancel checks. Every lender is going to be a little bit different, but obviously they want to make sure that they have all of the appropriate supporting documentation as they're walking, so that it's easy for them to walk through the calculations. One thing, moving on to the FTEs, the support will need to be provided again for the FTEs, showing the FTEs basically at the beginning of the period, which would be in 19. They're asking to show basically the average numbers of February and June 19, obviously in comparison to a January to February as well. So, and we're going to talk about FTEs in a little bit more detail as well. So moving on to the next page, which is the non-payroll documentation. Again, I think that the SBA requirements, they are requesting quite a bit of documentation as it relates to all three of these items, and it's just something to keep in mind. And hopefully, your lender, when you first receive the loan, kind of provided some guidance as to make sure that you start keeping all of your documentation, because a lot of this, we have it on auto pay, or it goes automatically, through a credit card or whatever it may be, and so it isn't top of mind. So just keep that in mind. If this is something that is part of your forgiveness amount, make sure, as it relates to the mortgage interest payments, for instance, that you do provide the lender a copy of your amortization schedules. Make sure that you're providing, either receipts or canceled checks, statements, any information. And again, one of the requirements is that the documentation is provided basically just prior to, so in February of 2020, and the month of the covered period. And then also they're wanting for you to provide through 1 month after the end of the covered period as well to verify those amounts. And that essentially is a very similar format, not only for the interest payments, but also for the rent and for the lease payments, and as well as the utilities in terms of that timing. For the rent and lease payments, they're also requesting that copy of your lease agreements, and the receipts or canceled checks are provided as well. So honestly, one thing I've seen, Tim, is some of the borrowers have been contacting the banks and saying, hey, for forgiveness, should I just forget about these non-payroll and just go with the payroll in regards to getting, if the money has been spent and if you can account for it with just payroll? I've heard that many of those are liking that approach instead of having to pull all of this documentation, because there is a lot of documentation that needs to be provided.
Yeah, definitely. A lot of people are going with 100% payroll.
Yes. Yes. Moving on to the next page, which is showing documents that the borrower should maintain, but it's not required to submit. This is basically the Schedule A worksheet that we've mentioned but haven't shown on here. Just keep in mind that that is something you are not required to submit at all, but it is important that you keep as much documentation as possible. And then just noting down at the bottom, in case of an audit, there are some forms that the SBA has mentioned that they're going to be requesting. Of course, one is going to be the borrower application form. They've also asked for the signed and certified transcript of accounts, so basically showing that approval and the communication that show that approval, a copy of the note in regards to the loan, so make sure that all of your loan documentation is in place. And then, of course, the standard, any other documents related to the loan. So basically, keep as much documentation as possible is the message here. So the next item that I'll talk about briefly is the bank and lender portals, and then some available tools. And, I think that a lot of us have, we think that we're PPP experts. We're not all PPP experts, but we've taken advantage of a number of the tools that are available out there, all of the free webinars and free CPE that would be available. In regards to the bank and lender portals, keep in mind that every bank is going to be a little bit different. Some actually may have sophisticated portals put in place, and some of the smaller community banks may not, where they're requesting that you submit certain documentations within their portal, but it may not be as advanced as some of the larger banks. So just keep that in mind. There are a couple of tools that I have really liked. I've worked with a number of them, especially early on in the process. And so we've included a link on here, but just something for you to take a look at in case you're looking for a different tool. The PPP forgiveness tool at ppforgivenesstool.com is the tool that the AICPA and Bids to Credit have worked on and put together, and it's great. It's really easy to use. It's easy for you to track your information. I use the early forms, but I believe that the newer forms would actually print the information that is within that looks essentially just like the application, which is great. Honestly, my favorite tool are the tools, and we were going to show these, but because of our technical difficulties, we won't be able to. But IBAT, or the Independent Bank Association of Texas, has put together some Excel, basically in all of the 3508S, EZ, and the 3508 form. They're Excel templates. They're easy to use. They basically have a tab where you could put each of sets of information, whether it's payroll or non-payroll, and everything, all the information would flow through, and basically you would be able to print out your form. Keep in mind that some of the bank portals, before you do go through the work of preparing your form, some of the bank portals, you'll actually enter the information within their portal itself, and they may not be accepting the applications. So just make sure that you communicate with your bank and make sure that you're using the appropriate information as you work through it. So I think I was trying to catch up on our time because I feel so bad because we started so late. But hopefully I've left Tim with enough time to go through his information.
Yeah. Well, we'll get through the slides, and then we'll try to do that as quickly as we can so we don't hold anybody up. So thanks, Letitia. That was a great detailed review of the process. So you can go to the next slide. So what we're going to do now is talk a little bit about just some tips and different aspects of the process, not just filling out the forms. So the first thing is some of the banks have actually sent due notices on these loans, and as if they were going to be repaid. And this went back, I think, to the original loan documents. The SBA made very clear that you actually have the 10 months to file the application, and you have until the forgiveness is either approved or not approved before you have to worry about the repayment issue. So if you've got anything from your bank, all that is basically set to where you've got 10 months to file the application and then let them run through it to see if they're going to approve it. So we're going to stress that you must have used the funds for the intended purpose. You've probably read about some of the fraudulent PPP loans in the paper, that buying yachts and everything else. Obviously a very serious problem with that. So, you're expected to be able to show it was used for the intended purpose. There was a CFMA webinar on July 28th about documenting your need for those funds. I would recommend that you log into CFMA and go look at that. It's a great webinar. We've had some clients that, the bank required they set up a PPP account, and then they never transferred any funds out of it. And the lenders are saying, you're making a case for the fact that you did not need those PPP funds. So we suggest that you get them out of that account as quickly as you can. So I would suggest if you have a separate account and you haven't been doing transfers weekly as you've had payroll costs and monthly as you've had other costs, that you get those funds moved as quickly as you can. Going back to what Letitia was saying, we do have to retain those records for 6 years because there is a 6-year audit period available to the SBA if they decide to come back and look at it. The only recent activity we've had on some of the rules was that rental payments to related parties on real estate, there has to be a mortgage on that real estate. And then, of course, a lot of construction companies have a separate company for their real estate. If you're going to consider that rental payment to the related party as a cost, then you have to make sure that there's a mortgage related to that real estate. The other thing that we've encountered is these FTE reductions can potentially create, less than 100% forgiveness. But the FTE reduction percentage, which would be, you'd have a base percentage based on what period you picked, and then you'd have the FTEs based on the application period. And if that comes out to less than 1, then it's going to reduce your forgiveness. But that is applied to the total costs, not the loan amount. So if you take the whole 24 weeks of payroll can literally outspend that reduction. So I'd suggest that if you've got FTE issues, that you do take the entire 24 weeks, put all the payroll in there, and hopefully you'll end up being able to avoid that FTE effect. The last bullet point is the EIDL advance. If you did ask for an EIDL loan and you did get an advance, you'll notice that you fill that in on the top of all the forms. SBA will automatically deduct that advance from the forgiven amount. And I'm presuming they will eventually find a simple way for you to repay that, because I'm sure you're not going to end up with a loan for $1,000 or a loan for $5,000 or something like this. So I'm not sure exactly how they're going to do that, but they'll find a way. So next slide, please. So, I'm not going to read all these, but these are the FTE reduction exceptions. So if you have an FTE issue that you don't have as many employees as you had in the base period, these are all the reasons that you can avoid counting that FTE reduction against your forgiveness. So I'd suggest that if you've got your short 10 employees or 5 employees, go read these, and you can just Google this, and you'll see these descriptions and look at each of these, because chances are one of these will fit that situation, and you'll be able to basically avoid that FTE reduction. Next slide, please. Okay, so owner employees are a little different than everybody else. So they are capped, and so I'm showing on here that for the 24-week period, it's a cap of $20,833, or 2.5 months times the 2019 compensation, net profit, or self-employment earnings. And for the 8-week, it's $15,384. So just be sure that you do respect those caps when you're making your calculations of your payroll costs. The owner employees, if you own less than 5%, then you're not considered an owner employee, so you don't have to worry about that. Next slide, please. Same thing with the non-cash compensation for the owner employees. For C Corps, you do get these local taxes and the health insurance and retirement. Same thing with S Corp, but for self-employed or Schedule C filers, you do not get those benefits. Next slide, please. So we're going to say a lot about this good faith certification. On all the forms, you do go through and you have to check off a number of certifications, quite serious certifications. And the attorneys are recommending that you document now, while you remember and it's fresh in your mind, of all the reasons that you did get a PPP loan. And so that if 4 years from now, the SBA came back and said they're going to audit you, then you can remember all those reasons why you were concerned about, the environment we had with COVID, and that you really needed this loan. So you had to have acted in good faith. You have to consider the necessity of the loan, the need for the PPP loan. But the bottom bullet says at the time of the loan application. So, this program has changed, it seems like, every week since the start of it. And a lot of people took actions and did things at the beginning based on the rules when they filed the application. And that's all that applies to you. So you don't have to worry about a lot of the subsequent changes. You did that in good faith when you filed your original application. So some of the components of your documentation, you'd want to show the economic uncertainty that we all faced, the current business activity, your other sources of liquidity that you would be able to access, that wouldn't be detrimental to your business, and how you were using those funds to retain workers, which was the whole purpose of the program. So those are some of the things you should consider in documenting that need for the PPP loan. Next slide, please. This is just a long list of things to put in your documentation notes. Your lack of access to capital markets, your existing lines of credit, the effect it had on your customers, losing customers, price reduction requests because of the problems your clients might be having with the environment, supply supply chain disruptions, and on down the list. And the whole idea is you're just trying to basically document, how difficult things look like in the COVID environment and why you needed the PPP funds. So that's just some tips for you, when you sit down to do that. Next slide, please. So the whole tax issue is up in the air. I don't think we've been given really any guidance on the detailed tax approach. And I will say that I've seen maybe 3 or 4 different approaches by the CPA firms. Some of the CPA firms, feel like, yes, it is, the income's not taxable. We all know that, but the expenses aren't deductible. So effectively, it is still the transaction has tax impact. PPP does. Congress intended that it not be taxed, but they didn't really make that clear enough. And so IRS came out with a position that, yeah, we're not going to tax the income, but we're not going to let you deduct the expenses. Congress has actually had several opportunities to fix that. Each of them had their own bills forward. But the interesting thing is, like in the HEROES Act, they didn't actually propose to fix this problem. So my own feeling is they aren't going to fix it, and it is going to be taxable. But there's some CPAs who are saying, no, that was what Congress intended, and as far as I'm concerned, it's not going to get taxed. So if you exclude that approach and you say, no, it is going to get taxed, then it's a question of when is it going to get taxed? So one of the approaches is this all events test, and first thing I should say is I'm definitely not a tax CPA. I'm just a corporate CFO controller. So you need to talk to your tax advisor about all these bullet points, but you do have a lot of open questions. So some are saying, well, we can tax it in 21 when we actually get forgiveness. And if that's the case, it does kind of incentivize you to not be in a hurry to file for forgiveness, because you may actually want to be able to file your return and then forgiveness come after that, and you take the position, well, it's all going to get taxed in 21. I think the more common approach is that they're going to try to say, well, we're going to exclude those expenses in 2020 when the expenses were incurred. And, you can even do that on an amended return. But what's hitting you currently is your ES payments. So, did you include PPP in your 915 ES payment, or in the 11521 payment, are you going to include it? And so you do have to have a conversation with your tax CPA about how you're going to pick up this income, or whether you're going to try to wait. With the election coming up, we also have the problem of depending on who gets elected, there could be a rate change. So then that might incentivize you to get it taxed in 20, because you might think there could be a rate change in 21, or you might think that the new administration will actually go in and fix this and it won't get taxed at all. So I'm really not giving you any conclusions here, but I'm telling you that you need to start some conversations about tax, because there's a lot of really, really open questions there, and strategy is important to consider in how you're going to approach tax. Next slide, please. So then we get to the GAAP issues and the book issues versus tax. And I don't think we've gotten any guidance from the FASB that's conclusive. The AICPA has put out a position paper. An example is EY has a position paper. I think RSM, most of the big firms have basically published what their position is on how PPP will be handled. And, you've got the balance sheet issue. I mean, when you got the cash, you debited cash and credited a loan account. You will eventually, hopefully with forgiveness, you'll be debiting that loan account, and you'll be crediting something on the income statement. So we're going to talk about that. So that's the income statement effect. And then the CPA firms, I'm sure, will all come up with some standard footnote language to fit the whole PPP process. Next slide, please. So one of the first places I saw some explanation is with the Journal of Accountancy. And what that came from was a document that the AICPA had put out. It's called a TQA. I guess it's like a white paper. And it essentially said, if you have reasonable assurance that this government grant is going to be forgiven, you can record on a systematic basis over the periods in which the entity recognized the expenses, the related costs, so that you're going to end up being able to take that PPP forgiveness income into your books in the income statement, if you have reasonable assurance that all the conditions for forgiveness are going to be met. Now, if you want all the detail behind that, you can go look at this AICPA TQA, and you'll see that that's, I think, the basis for a lot of what the CPA firms are using. Next slide, please. So this was the EY language, and one of the things they reference is the International Accounting Standards 20. And I'm not an auditor, and I'm not an expert on GAAP, but it was pretty clear that if you had reasonable assurance that the loan would be forgiven, that you can recognize the income on a rational basis over the period in which the expenses were incurred. So it all is going to boil down to, and you have flexibility there. You can either record it as other income, which is what I prefer, because I think it's nice for the reader of the statements to be able to see the PPP other income on there. But you can record it as a reduction to the related expense accounts. That's definitely going to create comparability problems with gross margin and everything else in later years. So that's why I don't really like that approach. But you do have that flexibility. So next slide, please. So a lot of this boils down to the whole idea of reasonable assurance and you meeting that forgiveness criteria. And when is that assured and probable? You're gonna have to discuss that with your CPA that's doing your review or your audit, because you're gonna have to show them all that documentation that Letitia was talking about, and you're gonna have to convince them that you're reasonably assured that you're going to get forgiveness. And at that point, I think you can record the income. That may give you some flexibility as to whether you're picking that income up in 20 because you have filed for forgiveness. Maybe you don't have it yet, but you've got all the documentation. Or you could discuss with your CPA that you would rather wait until you actually get forgiveness by the SBA, and so you're going to report it in 21 because you're nervous that there could be an audit, a lot of different reasons. Again, you've got some strategy there to think about, and I think you should take some time to really think about how you want this income recorded and whether or not you can justify what your position is. So next slide, please. So just some wrap-up things here. There's been a number of articles in Building Profits about claims and change orders related to COVID. And I suggest you ask yourself, assuming you are a GC or a specialty contractor, whether you've incurred expenses related to COVID and whether those expenses, might be reimbursable, via a claim to the GC or the owner. That's probably something best discussed with your attorney, but if you think there's a lot of money there, then it's definitely worth exploring. So recently, the SBA came out with some guidance on if you're selling your business or even if you're doing a capital restructure of any kind, that the SBA really needs to be giving you permission to do that. I think their point is that they don't want to risk their loan. And so they want to know, who's going to end up with this loan. So they've actually suggested that in some cases they may make you escrow that PPP amount for you to complete that transaction, and that way they know that their PPP loan is going to get paid back. There's probably not that many of you right now doing an M&A transaction, but I would say that keep in mind any major capital transaction or restructuring, you really got to look at these SBA rules about what you have to do in order to get their permission, and obviously the most onerous would be to have to escrow all that PPP money. So the Families Act, has a number of provisions that the government will pay you for like 2 weeks of costs that you incur if somebody is out because of COVID or they had to take care of their kids because of COVID. keep in mind that, you know, you can get reimbursed that on your 941, and we're really not talking about that as part of the PPP loan, except that keep in mind that none of that payroll can go on the PPP, you know, payroll costs because the government's reimbursing you. So just be careful not to double count that money. So the last thing is, you know, the next stimulus bill and the next PPP bill, and a lot of my clients thought PPP was great, and they're waiting for number 2. And I'm telling them, I don't really think that's going to happen. But, you know, it could. Congress just isn't making much progress on this next stimulus bill. And, you know, we really don't know whether there's going to be PPP in there. But if they do one, what I've read is that it's going to really be focused on the clients that have got a very, very difficult time, like a 50% drop in revenue. You think about people like the restaurants and the hotels and those kind of businesses, rather than just general businesses as they did the last time. So let's see. We're a little bit over time. I guess I'll leave it to Clint and James to decide where we go from here, but we're certainly open for questions if you've got anything in the chat box.
Tim, Leticia, thank y'all very much. I know we do have a couple of questions, and we do have some time. We've blocked till about 1 o'clock, so we'll try to get a couple of these questions in. James, did you want to share those with Tim and Leticia?
Yeah, sure. The first question was, are lenders already starting to review the forgiveness forms?
So I'll chime in there, and I know Leticia's, you know, helping the bank that she's related to. I have got a number of clients who've already filed on bank portals. Some have even been notified that they have forgiveness. So yes, a lot of the portals are open. You just got to get in there and get your stuff filed if that's your strategy. And we're finding the SBA is actually, you know, getting some of these things approved. So yeah, there's a number of banks open. Yeah.
Yes, and that definitely is true. And actually, from some of the banks that I've talked to, they've already received the funds from the SBA. So it went through a review process, submission process, and the SBA has already started responding and basically provided approval. And this has been the loans that we've talked about were on the smaller side. They were submitted through eTrans before the 3508S, and so it's probably a 3508 EZ form that was submitted. And the loans that I've heard that have been where they've been approved, they've been basically under $100,000.
Okay, great. We got another question. Are letter of credit interest payments eligible for mortgage interest?
I would say no. And
I would agree.
Yeah.
But you probably have to dig a little bit to find it out. But no, on the surface, I don't think that would be part of what would be included within the scope.
Yeah.
Okay.
And we definitely are not experts, but you know, we're going to give you an answer.
We've read all of the IFRs, that's
yes,
for sure.
Yes.
Okay, the next question is, can you file an application before the 24-week period elapses if you are using the 24 weeks as your covered period?
And the answer is yes, you can.
Okay.
Yes, you basically just you have to make sure that you have used all of the loan proceeds for which you're asking for forgiveness.
Okay.
Yeah, and I think, James, you know, one of the strategies we've seen is if somebody thinks they're going to have a dramatic layoff and they're going to have enormous FTE issues, you know, going forward, then they may want to go ahead and file so that they don't have to address those big FTE problems. So that's some of the reasons why people have filed early.
Okay, we have another question. Would you mind giving more input on the PPP bank account?
So most of the banks, I think, required that the PPP money be put in a separate account. Some actually required that you provide documentation before they would advance the PPP money, but that was pretty rare, but there were some that did it. And then other banks just said, no, you can just put it in your operating account. So if you're one of those where they made you set up a separate account, most people transferred out of that account into their operating account each week as they incurred payroll costs or, monthly on lease costs and that kind of thing. But I'd say the majority probably made you set up an account. You agree with that, Leticia?
Yes, a new account was set up for this.
Yeah.
Okay.
But I guess to Tim's point earlier, at least what I heard is what lenders are seeing in some cases is that the funds are still there in the original PPP account. And so to Tim's point, make sure that those funds are being used appropriately and being transferred into the operating accounts to go against your payroll costs or any other costs where you're asking for forgiveness.
Okay. The next question is, we are seeing that the SBA is placing blanket liens. Do you have any guidance on if once forgiveness, these are being released?
I haven't heard of SBA filing any liens.
No.
I would say that if you've got a business transaction going on and you don't approach them, I could see them taking some kind of action like that. But no, I've not heard anything about any liens from SBA.
Okay.
Hey, Tim, in regards to your point earlier about putting funds into escrow if there is a transaction in place, I have seen one instance of that occurring where the SBA did approve the sale of a significant amount of the equity in an entity, but they did require that escrow account be set up. But I didn't see any documentation related to any liens being placed in that case. So.
Yeah, and I've had 2 clients do the escrow process, and it was not difficult, but the problem was cash, and basically having to go back and put that amount of cash in escrow is pretty difficult for some people.
Okay, we have one more. If you claim the other income for GAAP in 2020, will you be required to report the income for tax purposes in the same year?
I would say no. We all know there's differences between tax and GAAP. So I think you just need to make sure you've got a logical documented position for your GAAP entries, and then also for how you're going to report it for tax. But no, they don't have to be the same.
Okay. That's all the questions for now. If anybody has a last minute question you want to get in, we've got a couple more minutes.
I guess just as we're waiting for questions, we've gone through quite a bit of information and quite a bit of detail, but I was trying to think through, what are the top considerations as you're thinking about this overall process. And the first, as we mentioned, is, go back and check the eligibility for your loan. It's really important that you have a strong basis for why you requested this loan. Secondly, go back and take a look at the calculation of your loan amounts. Those, we rush through those and push through those to try to get that information in and just to get the funds available. But go back and see, what was submitted and how your loan was calculated. Third, think about, how you really use those proceeds, the loan proceeds, and make sure, and Tim had some good points on going back and essentially using them people are using them mostly for payroll and not necessarily the non-payroll amounts, and that's fine. And then, take some time and really look at the forgiveness calculation, because it is important that you submit that correctly. And finally, as it relates to documentation, the documentation really is critical. There is a lot of information that needs to be submitted to the lenders. Just make sure that you go through and, come up with a great way to store your information, keep it internally, and not just send it to the bank piecemeal, but make sure that you do keep that for the 6 years, because it's just important to have that in case of an audit.
Yeah, and I guess I'd give you a couple of points on the mechanics of the process. The portals that I've seen, one portal was built by Sage, and I've seen that at 3 different banks. So they must have done a good job of building the portal and then offering it to the banks. And on that portal, you can fill out everything, and you can play with it for days, go back the next week, whatever, and until you hit submit, you've got the flexibility to look at all that data and decide if you're happy with it. They have an upload button, basically, that you can take those digital files, and each one of the areas has an option for the upload for that, so that you can have all your lease payments in one folder, and you can have all your payroll in another folder like that, and go through and just upload that stuff to make it easy for the lender. And I would encourage you to do some test runs to see if you get full forgiveness. And if you don't get full forgiveness, really go back and look at your strategy, look at all your documentation, try to figure out what's keeping you from getting full forgiveness. Because sometimes you're talking about, some pretty big numbers there that if you aren't, you should get with your CPA firm and see if they can help you figure out, why you're not getting full forgiveness. But don't be concerned about the process. The bank portals are pretty easy to use, and you get a lot of chances to go in there and change data and play with it and make sure it all works before you submit it to the lender. And then lenders have come back with some very specific questions. They obviously are looking at this stuff, and they'll say, this particular thing you submitted, please explain this, please explain that. I'm sure they don't look at everything, but you're going to get a few questions from the lender, typically on a submission, and then it goes to SBA.
Okay, question. Will we be able to make the slides available to everybody, Tim?
Sure. How do you want to do that, James? Do you want?
We'll have Melissa send it out to everybody that was.
Okay, yeah, that's fine. Sure. No, they're welcome to have them, and I think, we've got our contact information on there, and Letitia and I are certainly willing to answer questions or help people if they need it. So they can just reach out to us directly if they've got some kind of issue.
Yeah.
And just to mention also, because we weren't able to show the IBAT slides or their workbooks, we had links to them but if anyone wants to take a look at those, they really are great tools, and they're free tools, but they're, as far as I know, they aren't directly posted on their website, so we can provide those as well. And again, they're great tools, easy tools to be able to enter in your information, and it basically spits out the form with all the instructions and everything.
Okay, and Tim, on one of the previous questions, I had said letter of credit. They were asking about line of credit, which I assume the answer is the same.
Yeah, line of credit interest is not acceptable as a cost. It's got to be, it can be related to equipment or related to real estate. Basically, is where you're going to find the interest expense, not lines of credit.
Okay, and then someone is saying we use separate PPP account for utilities and rent, but we kind of want to fill out the forgiveness application with only payroll only. How do we do that?
Well, I'm not sure I completely understand the question, but I don't think the separate account is the issue. As long as they've incurred those costs, they can take those costs for the 24 weeks and document the payroll costs and submit them. The separate account is just something that was supposed to make it easy for people to keep track of, how much PPP money they've used.
So they're not going to be looking to which count the funds came out of to pay for the stuff that you're asking for.
No. I mean, most people didn't, their payroll came out of the regular payroll account, right? And then all they did is just reimburse the operating account or the payroll account with a certain amount out of the PPP account. But the normal treasury functions went on, and all you're doing is just reducing that PPP account every week for the amount that you were going to ultimately ask for forgiveness. So no, they don't have to worry about that it didn't come out of the PPP account. Nobody did that. I mean, nobody changed their payroll process and had it come out of the PPP account.
That's
Yeah.
correct.
Okay. Well, that's it on the questions. Thank you very much for taking the extra time to answer those.
Okay. Well, we apologize again for the technical problems. No matter how much you plan, it always seems
We
like
had a great
something
plan.
happens. Yeah. So we had a great plan, but anyway, we do apologize for that.
Tim, Leticia, we very much appreciate y'all's time and y'all's preparation for the presentation. We know it takes a lot to put this together. There's a lot of moving parts with this PPP process, and so thank y'all very much for sharing y'all's knowledge with us today. I want to thank the audience for y'all's participation and asking questions. We will make sure that we get the slides out to everybody that attended today, along with CPE credit. And if there's any questions or if anybody has any additional needs, please feel free to reach out to James or I, or if you want to reach out to Tim or Leticia directly on questions, that's great too. We appreciate everybody's time today. Everybody have a great afternoon.
Okay. Thank you.
Thank you.
Bye-bye.